Here we go.
Money, money, making growth.
Scary money don't make money, but smart money tracks everything. Welcome back, Dividend Stackers. This week, more dividends hit the account. I reinvested. I added $1,000 more, and my cost basis just came way down. And now, for the first time in this experiment, my spreadsheet shows I'm officially positive. Let's break it all down and predict next week's 9/19 dividend. All coming up. A quick portfolio update here. ULTY closed on Friday at $5.57. I am now holding 813 shares with an average cost of $5.93. Market value is $4,528, and my dividends received $313.41. That brings my true gain, including dividends, to a positive 0.47%. This is why I track with the spreadsheet. It tells the real story. The market says I am down $292, but dividends flip the script. Without tracking, you think ULTY was a loss. With dividends, it's proof the snowball is working. Comment below if you track your investments this way, or do you just trust the broker's screen? So this week's dividends of $74.24, I reinvested back at $5.52, and that added me another 13 shares to the ULTY pile. And that is compounding in action. I wasn't able to drip the full $74.24 because since I buy in after hours when the price drops due to the dividends, I can only buy in full shares. So for those of you new here, I went ahead and added that info into the spreadsheet. It now shows 13 more shares for $5.52. On top of that, my $1,000 buy on 9/9 brought in 180 shares at $5.56. And this lowered my average costs and sets me up for a bigger dividend every week. So let's zoom out to the spreadsheet again here. Here's what I tracked that the app doesn't show you. The taxes, after tax dividends year to date would be sitting for me at $357. Uncle Sam still wants $12.85. So it's not really what you earn, it's what you keep. And that's the reason why I track this. The margin so far, I've used $616.44. That keeps me at a 48% buffer, meaning I got plenty of space before risk. Zero daily interest, so the debt is basically free leverage. My monthly flow, $171 in August for dividends. And as of September, so far, I am sitting at $129. With 2 more weeks left. Even if payouts fluctuate, you can see the weekly line is trending up. I ask you straight up, would you rather see the broker balance as flat or a spreadsheet that shows you money stacking week after week? And another big milestone alert, we just hit 426 subscribers. This community continues to grow crazy fast in such a short time. So thank you, every single one of you dividend stackers. We are officially on the road to hitting 500 subs. And a big promise to you, I'll keep dripping, I'll keep tracking, and continue to stay transparent here at ULTY YOLO. Now to some weekly trade recaps. This week was busy for YieldMax. From September 8th to September 12th, they rotated through App, HUD, GME, Chewy, ELF, and CUT, ASTS. That flow is what funds our dividends. So here on Friday, 9/12, they added RKT for 1 million, exit at a bull for 2.35 million. The premium for options was negative $50 million. The net stock cash flow was 9.84 million, and the price effect was 98 million. Right corner, you'll see the NAV sitting at 5.571, the AUM at 3.18 billion. And the price closed at $5.57, and total outstanding 571.1 million shares, and that is up 19.7 million shares day over day. Here is the Friday 9/12 option breakdowns. The day was skewed to buybacks and rolls, a net premium, as I stated earlier, of negative $50.17 million. To the left, you'll see the new credits, in the middle, the rolls, and the right, the debits. Obviously, since this is a weekly dividend payer, they trim the risk right into the weekend. And for the weekly summary here, you can see the total, the premiums loss on options trading was a negative $262.95 million. The price effect was $263.60 million. The NAV rose from $5.54 to $5.57, and the AUM ended at $3.18 billion. Some highlights here: SMR was the biggest add, ASTS was the biggest exit. We bought GME on Tuesday, we sold it on Wednesday, and the same thing happened for Chewy. So now for the dividend estimate, this is what I predict will be paid on 9/19. Based on the manager style payouts from past weeks, I'm going to estimate a 0.094 cent dividend, and that really falls within the 0.08 and 0.10 average that we have been receiving. And this is because of the strict realized cash flow this week. It was negative. Basically, we didn't earn any money, we lost money. And so this would mean printing a 0.094 cent dividend would use return on capital, which is the ROC, or a buffer from previous weeks. So let me know what your take is. Do you like seeing Yomax swing into meme stocks like GME and Chewy, or would you rather they stick to safer names? Let me know in the comments below. And based on the way I think the managers trade and the premiums that they collected, which was obviously negative this week, and my estimate 9/19 dividend of 0.094 cents per share, me holding 813 shares, that will be a $75 expected return next week. If that holds, September could close with one of the highest net payouts yet for this account. And for today's quote, do not save what is left after spending, but spend what is left after saving. That is a quote from Warren Buffett. And that's the mindset. My reinvested dividends aren't leftover change. They're fueling the compounding engine. And before wrapping up, thank you for your support. Whether you subscribed, commented, or fueled the grind with those energy drinks, it is deeply appreciated. Every little bit makes this channel possible and keeps me grinding on late nights like this. So here's my question for you. Now that ULTY is officially green on my tracker, do you think dividends can keep me positive long term, or is price erosion going to eat it away? And drop your take. I want to hear it. As always, this isn't financial advice, just me, my account, and my ULTY experiment. Thanks again for 426 subs. The road to 500 is almost here. ULTY YOLO out.